Welcome to Charts This Week. My name is David Linton. I run Updata. Happy New Year. This is the first Charts This Week this year. Did a very big global report last week, which hopefully a 64 chart report, which hopefully many of you found useful. It had the very sort of long-term picture on the year out. So this week I'll go a little bit shorter term. But of course the interesting thing, if we look at stock markets first, is the S&P 500. The 1300 target was the thrust target that we had in August. This was the buying thrust that we saw last year in August, pointed to 1300. We'd had a target right back in 09 of 1270, which we're through, and we're now nudging this 1300 target. So the targets that were given are now being met. When the targets are being met or exceeded, that's a bullish picture. So in fact, we take some bullishness from the fact that we are meeting the targets. And here's the 60-minute cloud on the S&P 500, and we can really see this short-term trend in place here. Absolutely critical. So when will we know when this run in the stock market is over? It's this 60-minute chart that we'd be looking at. Right now it's about 1270, 1275 is the level that the market needs to stay above to maintain this trend, and of course that number's changing all the time. If we look at the 1-minute targets, quite interesting that we had a thrust target last week of 1292. That was met by the end of the week. So the short-term targets, the 1-minute chart, the short-term target's been given and met. We had another thrust target in the big move towards that target of 1292, and we've now got a target of 1318. Interestingly, if you use 1280 as your stop, your risk-reward ratio is 1.9. So it's a favourable target, this one. The downside versus the upside is favourable, about 2 to 1, so it's a good risk-reward ratio. Just remember that these charts do change all the time. It's a 1-minute chart, and watch out for new downside targets coming in. You do need to monitor it. If we look at the NASDAQ, really interesting. I mentioned this in my report last week. We're really through this 2006 high. We're now making 8-year highs on the NASDAQ. So really quite key. Of course, the dot-com bubble heights is still way up there, but the fact is that we're breaking to new multi-year highs on this market. So tech is looking particularly good. On the FTSE, 6,500 is the thrust target off August. Unlike the US market, the FTSE hasn't actually met its target, so FTSE is looking quite good. The risk-reward ratio is about 1 to 1 if you use 5,500 as your stop. This is, of course, a daily 50 by 3. It's a medium-term chart, thinking about months ahead, but 6,500 is the target that we'd look to on FTSE. Here we see euro dollar, and the picture is very interesting. Last year we were bearish on the euro. We did have a recovery where the euro did sort of in the autumn have a recovery, but we fell back through the cloud towards the end of the year, and we're below the cloud. We're just testing the cloud at the moment, the base on the price, but this is bearish territory. So we'd expect the euro to be coming back to these lows because of this cloud picture. And in fact, if we look at the targets, the point and figure targets on the daily cloud, quite interesting that we've got a 156 upside target, which was saying that we'd go back to the top when we did have the thrust off this low. But what's interesting, again, this is a multi-year chart. What's interesting is that we've got all these downside targets, 102, 106, there's even a target of 97, and the risk-reward ratio is unbelievably high. In fact, you become suspicious on this one about 10 to 1. It's saying that the downside versus your stop out there's a significant amount of downside. This picture is going to take time to play out. We're talking months, not days. This is a daily chart. But what is interesting is that all the downward pressure, it's saying back to parity on the euro is where we're headed this year. And if we look at the 60-minute chart, this one is showing how we've been a bit bullish on the euro last week, where we did have a little bit of a recovery into the 130s, but now we're coming under pressure again. Will we hold this bullish picture and at about 130, 150? If we go through there, then we're going to come back and test this base at about 129. So bearish this first week of the year, bullish last week. It does show how the shorter term picture is changing a bit more frequently. And the 1 minute chart, whilst we did have an upside target of 135, we only got to 134.60, so we didn't quite meet the target, which in itself is a bit bearish. But now we've got some new downside targets kicking in: 131.50, 131.80. These are the targets that were given last week at the end when we start to fall away. So this week we expect the euro to probably have a little bit of a struggle. Here we look at sterling versus the dollar. Quite a strong showing on sterling last week, back from the mid 50s to the high 150s. This is the 60-minute chart, so really the picture is a bullish one short term at the moment, but we've made that move. We're consolidating a bit. The cloud test level 158 is the sort of level at the moment on the cloud, and on the lagging line about 157. So if we stay in these high 50s, then we're maintaining this trend. And again, if we look at the point and figure targets, 160, 130, 162 are the thrust targets that we saw off last week's move. A small amount of downside targets, but really quite good upside targets back through the 160s, and risk reward ratio quite favourable, about 4 to 1. So really quite key that sterling is looking strong. And if we look at euro sterling, we see how that picture has played out. Sterling has been strong this year against the euro, going from 86 back to the sort of low 80s, 82 level. If we go back and break this low, of course we'd expect to go lower. So this is the sort of floor we'd expect to see tested with sterling and the euro. Oil, the big news on oil, many of you will have read it in the report last week. The $100 mark looks very likely to be broken this year. We've now, breaking to new highs. Really fascinating on the correlation with the stock market. Through November and December, the correlation between oil and the stock market, so global sentiment really, was very, very high in the 92% sort of area, so very highly correlated, but more importantly, very highly correlated for a very long period. So, for 2 or 3 months, it's unusually high correlation, and how long that correlation will go on for is questionable. We see how the correlation changes all the time. So, really quite fascinating that oil is highly correlated to markets, all going up at the moment, and looking set to make new highs. And if we see on the point and figure chart, 96 was the target. This target was given in early last year, the thrust target. We're now pushing into the 90s and making for that target. This 111 and 124 are the targets beyond that. Of course, if you go into the 50-cent chart, you'll get different targets as well. But it's all up. There's a lot of upside on oil at the moment. So the medium-term picture for oil is a very bullish one. But if you look at the 60-minute chart, we see that we have effectively been trading quite a lot sideways in the sort of shorter term time frame. The correlation between markets is a bit more variable, so this is the S&P correlation again. And so the picture on oil is not so clear. We really need to break into the sort of the mid-90s level to start this big up move in earnest. And if we look at the 1 minute targets, we've got a 94 target on the 10-cent chart. These are very short-term charts, remember, so keep an eye on them because they change. Last week we had a downside target of 88.40 coming in, a mixed picture, and just watch for new targets developing this week. But at the moment the picture's a bit mixed. We'd favour probably the upside this week with this uptrend kicking in, so quite key on oil. Brent, of course, Brent is priced higher, and we really, the big story is that we are getting very close to nudging this 100 mark on Brent. So, we do see upside targets 100, 100.2, 101, 101.4. There is a little mini downside target of 97.20 at the moment, but looks like Brent is going to break this $100 mark. So, really quite key that. Nat gas, US nat gas, starting to look pretty bullish, having been most of the end of last year in a bearish phase below the daily cloud, now starting to break up. This is data from the Updata feed, by the way, so all your nat gas oils all coming from Updata's latest feed, and here we see that nat gas is looking really stunning now that we're sort of through this cloud. So I'd expect upside this year on nat gas, and in fact the upside targets of 540 and 610 suggest that. And really we saw how this 335 target was met, but we've now got this upside target, so it does look like nat gas will break. And if it breaks $5, this is a very psychologically important level for nat gas. The long sort of trend of the last few years of downward move on nat gas looks like it's reversing, and we've now got a long new uptrend starting. So this probably is the year that nat gas starts to trend, and we've got good targets to show that. If we look at NBP, this is the OTC contract, winter-summer. We see again nudging the summer highs here. We're making a play for that. We have been pushing higher, bullish on the daily cloud. If we go to the 60-minute chart on NBP, we do see that we are coming under a bit of pressure. It's like we've run, we're consolidating, and the price and the lagging line are pushing through on the 60-minute chart. So it does suggest that maybe we're running out a bit of steam here. Picture is very mixed. We had an upside target of 154.80 that was nearly met, and then we've got a downside target of 53.45, which was met, and we're really quite congested on gas, so quite hard to call the European gas market at the moment. If I look at German power, here we see the German power contract, this 55 euro level, the highs that we saw last year in the summer, really trying to hit these levels again, so acting as a little bit of a ceiling, but it is a bullish environment on the daily chart. But again, if we go to the 60-minute chart, like gas, power is coming through on the 60-minute chart. So short term, we hit this resistance at about 54.5. We've come back sort of below the cloud on the price, and now through on the lagging line. It does look like power may not have such a good week or two ahead of it based on this 60-minute chart. And if we look at the 1-minute targets, we see the downside targets that were given last week, 52.65 and 52.35. These were met. So we have a little mini upside target of 53.45. 1-minute chart on power. Keep a very close eye on this chart for your price targets. I know lots of you who are trading power are using these targets. You do need to keep a close eye on them if you're trading European power. And then if we look at Nord Pool, again on the Updata feed, a really super fast feed for Nord Pool, we see that we're breaking to new highs. So on this contract, on the Nordic power, looking very bullish, breaking to new highs at the moment. So trend very much up. This is a 60-minute chart. Coal, wow, what a story coal has been. You'll know that most of the end of last year we were very bullish. We're saying there are targets of 108 and then into the 120s. We see that we've really come and met these levels. These price targets were given off buying thrust well before the story of coal was breaking out. But what we do see now is this 117.50 level. There's a bit of a fulcrum for coal. If we fall back through this 117.50 level, then we do have, in the short term, this is a 60-minute chart, a double top on coal really. So it's, you know, this 117.50 is quite key. If we need to watch holding that. And again, if we break higher, then you know this was a consolidation, and we're going to go higher still. We see here the targets of 114.25 met, 123, 122.50. These targets given back in the low 110s and met, but we don't have any new targets. We're sort of dilly-dallying here, and it's quite hard to call coal at the moment. So just watch that 117.5 level. ICE, here we look at the ICE futures again on the Updata feed. This is the emissions contracts. On the daily cloud, on the daily cloud, we see now that on emissions we're in sort of bearish zone, quite a lot of downward pressure. So at the moment the picture on emissions is one of prices heading lower. And if we look at the 1-minute chart, again, if you're trading emissions, these are great. We did have an upside target of 14.69, but we do have this new downside target of 14.38 kicking in. Short term, we do have a little bit of an uptrend here. But if we fall through this sort of 14.53 level, making a new low, that activates this target. So emissions really tight at the moment and quite hard to call. If I look at gold, just the last look at gold, the 60-minute chart on gold, we see that we really fall out of this 1400s. We've come back, consolidated, and we're sort of testing new lows again. So the picture short term on gold is not great. Of course, if you saw my report last week, the long-term targets on gold are quite spectacular. So we do see gold long term has good, you know, great sort of upside. But what we are seeing is a bit of a pullback here. So the long term looks good, but the short term we're pulling back. Note also the correlation to the euro, where it was highly currency driven, then not towards the end of last week, and the correlation kicking back in. So it's not always the case that we follow completely on that. And then if we look at the last downside targets on gold, 1356, 1336, 1332, we do have downside targets kicking in here. So really what's interesting is that gold in the very very short term, we do have a downward pressure in the 1330s. So keep an eye on this. If you're trading gold, you need to watch this short-term picture. Remember, these 1-minute charts change all the time. That's it for this week. Until next time, happy charting. See you then.